Financial Planner. Follow us on YouTube.
Banks have proposed to do away with the deposit protection for the people. Let's get into the economic collapse financial news. Now, we understand that Venezuela defaulted and Venezuela is collapsing right now, and we know they're making a deal with Russia, they're restructuring the loans, but we need to understand that Venezuela is connected to other nations and they're at risk also. I mean, we look at Lebanon. Lebanon is one of the most world indebted countries. Lebanon may hit a debt to gross domestic product ratio of about 152% this year, and this is according to the IMF. And we can see right now that Lebanon right now is they're using this for a proxy type of war with most likely Iran. So we need to look at these nations. Ecuador, after a borrowing spree, the nation's debt obligation over the next 12 months ballooned to a 9-year high relative to its GDP. We look at Ukraine and we understand what happened in Ukraine. They are defaulting. They are in a huge amount of debt, about 17.5 billion in debt right now. And we see that the country is still struggling to move forward. We see Egypt. Egypt's credit default swaps are hovering near the highest since September. The cost for protection surged in June as regional tensions heated up. We also see Pakistan, Bahrain, Turkey. All these nations right now are connected. And if Venezuela goes down or something happens, there's a black swan, it's going to affect these nations. And then these nations are going to affect other nations. And it's going to be a domino effect. We see that the corporate media out there is trying to make it look like that the consumer debt problem is really not a problem here in the United States. And we talked about how people are living off credit cards. We understand the global debt problem. And they're saying that, yes, there's a lot of debt out there, but according to the reports, it doesn't seem that this type of debt is going to slow the economy or hurt the economy just yet. But they're saying there are cracks forming. And this is their way of saying that there isn't really a debt problem. Remember, the central banking system, they don't like to talk bad about the central bank, the Fed. This is their product, debt. They don't want debt to seem bad. They don't want debt to make it look like the economy is doing poorly because of the debt problem. Because if this is true, then all the central banks around the world who've been loaning their currency out with interest, well, they're out of business. So they can't allow this to happen. But what's very interesting is that the ECB and other central banks, they're looking to maybe get rid of the deposit protection scheme. And what they're saying is that the covered deposits and claims under investor compensation schemes should be replaced by limited discretionary exemptions to be granted by the competent authority in order to retain a degree of flexibility. Now, to translate all of this, what the ECB is saying is they want to get rid of the deposit level right now, which protects individuals with about 100,000 euros. So if the bank goes belly up, you have the insurance and you get your money back. And they don't want this because what the reasoning they're using is that they're saying that because of this protection, like the FDIC, the insurance where it protects you against a bank failing, they're saying the insurance makes it so people will go in and take their money out and there might be a bank run on these banks that are failing, which makes no sense to me, because if it's insured by the government, you wouldn't really see a bank run. I mean, people, if they hear a bank is failing, they're going to go in and take their funds out anyhow. What I think they're doing right now is they're preparing for this next crisis. They understand that most of these banks are completely insolvent, especially in Europe. Here in the United States too, but Europe is a complete and utter disaster. And I think what they're doing right now is they realize that their insurance that they have set up right now will not cover the number of banks that will be going down. And they came out with this ECB paper. It was published on November 8th, 2017, entitled On Revisions to the Union Crisis Management Framework. And the bail-ins, they are basically reworking the bail-in documentation to get rid of the insurance part of it. And we can see that it looks like they are preparing for the next crisis because they understand when this crisis hits people, and they've seen this before. Remember, they do many tests in all different countries to see how people are going to react to certain things. They saw it in Greece when they heard, there were going to be bail-ins, banks might be shut down. They ran to the banks, they took out their currency. It happened in Italy, it happened in Spain, and they're using this excuse that, the insurance makes people think that they have to go and rescue their money, which makes no sense to me whatsoever. They're trying to cover themselves. The central banking system is trying to cover themselves because they know when these banks go belly up, they know that the insurance will not cover any of this. Here in the United States, we know there's not enough of the FDIC insurance to cover the number of banks that will fail. Yes, if 1, 2, or 3 banks fail, they might have enough to cover those banks. If 10 fail, it's completely impossible. They will not be able to do it. And we see at this point, they implemented the FDIC insurance and other insurance around the world after the Depression to build the confidence back up so people would say, hey, I can put my money in the bank, it's insured, I don't have to worry if the bank fails, I will not lose my money, because that's what happened during the Great Depression. And now they want to get rid of it because the crisis is too big. They can't control the size of this crisis. And this is why you need to be ready and prepared. And we've been talking about bail-ins for quite a while. This is when the bank goes in and actually takes your currency and gives you worthless stock of that bank that is failing. And then they create this bank holiday. They put restrictions on how much you can take out of your own funds. And all of a sudden, your money is trapped inside of the bank. That is a bail-in. A bailout is when the government uses taxpayer money to give it to these financial institutions to bail out whatever they need to be bailed out from. And we see at this point that governments right now, well, they're not doing the bailout thing. So the banks had to come up with some other idea, and this is why they had created the bail-in documents. They tested it in Cyprus, they tested it in Greece, they tested it in India. They're testing it all over the place to see how this actually works and what the reaction is from the people. And they realized that, people are going to be running to these banks to try to get their funds out of the banks. And they know that that's going to be impossible because the banks don't really keep that type of currency in the banks. They also know that the insurance that they have on all these banks is not going to be enough to cover the number of banks that are going to be going down. So they're rewriting everything, and they're preparing for this major, major crisis, which is headed our way. This is why you need to be ready and prepared.